Hey, everybody. If you're fans of the Olympics, maybe you caught the women's high jump and the men's pole vaulting earlier this week. And both of those athletes set new world records. And that is exactly the opposite of what's happening in the stock market.
Yeah, apparently the market decided to set new records of its own before the Olympics. It's fine. It happens.
One of our favorite companies, Qualcomm, certainly has taken a hit, but we need to talk about 2 points from their most recent earnings report regarding their revenue streams. Let's jump in.
Two in particular. One is automotive, which is in overdrive and is really confusing because it seems like everyone got fixated on the Snapdragon X chips for laptops. It is exciting, but I don't know why anyone was surprised that there was no revenue reported. They just came out in June, and this most recent quarter ended in June. It's going to take a few quarters for Snapdragon X sales to start to kick in. So let's talk about automotive again, the real growth driver at Qualcomm at the moment. And then the other is the Chinese smartphone OEM revenue, which we debunked last year in a series of videos. We'll link those below in the description if you missed them. But we got attacked on this by a lot of people saying that Qualcomm sunk because of its China business. And doesn't look like that happened. Curious. Let's talk about it.
This episode is sponsored by our friends at public.com. Are you dissatisfied with your savings account? Check out public.com.
Public.com has just launched its new high-yield cash account, offering an industry-leading 5.1% APY. There are no fees, no subscriptions, no minimums or maximums, just 5.1 interest on your cash. You can transfer or withdraw cash as often as you like, and you get up to $5 million in FDIC insurance. Grow your cash at an industry-leading 5.1% APY with a high-yield cash account at Public. Go to public.com to learn more.
Qualcomm is designated as a fabless chip designer primarily in our semiconductor industry flow. However, they do make some of their own chips, which makes them partially an integrated device manufacturer. We'll talk about this a little bit later. This may be an important point to remember later on. They also have a portion of the business that is IP or patents. We're not going to be talking about this on this episode. However, those patents would fall into the QTL segment that Qualcomm reports. As Nick mentioned, let's start first with the automotive segment. This is all the way back in Q1 fiscal year 2024. That corresponds with Q4 of calendar year 2023. They had a record automotive revenue stream of $598 million. And then in Q2 fiscal year 2024, that's January to March of this year, they had another record of $603 million. And finally, this most recent quarter, yet another record at $811 million. This is all amidst a downturn in automotive sales. We've covered many companies like Microchip or On Semiconductor who continue to report slowing revenue due to automotive and industrial slowdown.
Yeah, that's right. This is really incredible. And I think the important point to remember here is Qualcomm's portfolio for automotive is diversified and differentiated all at the same time. So of course they have what we should call legacy connectivity chips, not wholly dissimilar from the connectivity chips in your smartphone that Qualcomm makes that helps connect your phone to a wireless network or a Wi-Fi connection. Same stuff going into cars. So they're not wholly tied to the self-driving vehicle segment, also not really tied to the electric vehicle segment of the automotive industry either. Those are kind of the two areas that have been in a bit of a downturn. So you think like Intel's Mobileye absolutely crushed the first half of this year. It's because they're all in on self-driving cars. That segment has taken a big step back within the auto industry as these automakers look for ways to cut costs because of the auto industry downturn. And then also, of course, electric vehicles, like you mentioned, we've covered this many times now in the last 3 quarters. EV sales have come to a screeching halt in recent quarters. Qualcomm kind of gets to sidestep that with its differentiated portfolio that covers a lot of things. For example, one thing besides the connectivity chips is also the infotainment controllers, the chips that control the infotainment system in your car. really kind of underrated, boring sounding business. These chips for infotainment systems is actually a business line that NVIDIA has been exiting the last few years. So that's another area Qualcomm has easily sort of gobbled up. And if you think about it, this makes perfect sense. It doesn't really matter what kind of car it is. It could be an EV, or it could just be a traditional internal combustion engine powered vehicle. They all need connectivity, and they all need better infotainment systems that look more like the smartphone experience we've all come to rely on and get used to looking at every day. So Qualcomm really knocking it out of the park here.
Here are Qualcomm's revenue streams. Automotive, 87% year over year growth. They do expect that revenue to stay the same as it is this quarter, which would mean record highs and plenty of year over year growth. And Qualcomm's profit margins continue to improve. You can see 27% at the high end of guidance range for this most recent quarter, which is up 3 points year over year.
And again, that is largely driven by that small but fast growing automotive segment. But also, as we've talked about in past videos, the more gradual growth of the smartphone business for handsets, as Qualcomm mentions it. So basically what's happening here is Qualcomm has done the work in prior years, developing these new chips for automotive and for IoT, which is where the Snapdragon X laptop revenue will eventually be reported, at least a few quarters down the road. But as these revenues rise and they start to realize sales from new products, you get the margin expansion, which is why pretty tepid looking 11% year over year growth for a semiconductor company. I don't know who's really complaining about that for a company that's doing over $9 billion a quarter in sales, but whatever, not the fastest growing semiconductor business out there. But profitability, because of the rising margins alongside the revenue expansion, 25% year over year earnings per share growth. Pretty good stuff.
This has been our bull thesis for Qualcomm all along, that free cash flow has continued to rise. Free cash flow has gone to nearly $9 billion in the first 9 months of fiscal 2024, up 45% from the same period in 2023. And you can see capital expenditures also going down, accelerating that free cash flow growth.
And walk away, of course, Qualcomm pays a dividend, it repurchases plenty of stock, but because of the free cash flow boom, it's done wonders to restore the balance sheet. I know that was a concern of a lot of investors a couple of years ago during the downturn. Qualcomm's profitability on a free cash flow basis was down, and they were using cash off the balance sheet to repurchase stock. Very timely tactical action on Qualcomm management's part a couple of years ago. But now the free cash flow conversion is up. It's replenishing cash and short-term investments on hand. It's now up to $13 billion compared to just $11.3 billion at the start of the year. And they've also paid off a little bit of debt along the way too. So balance sheet is actually in pretty decent shape. Not the best balance sheet out there. Obviously, we would like to see more cash and investments than debt. But, if this trend continues in the next few years, that's certainly going to be the case before too long.
One other thing we should point out on this balance sheet is the inventories. You can see that the inventories have decreased a bit, which is also helping those margins.
Yeah, another thing that we explained almost 2 years ago now, when we started this channel up and we're explaining Qualcomm's business model. So good to see those inventories finally moderating. That's the integrated device manufacturer, IDM portion of Qualcomm, in part, not totally. Inventories also include third-party contractors and their inventories of Qualcomm parts. But again, Qualcomm still handles a bit of manufacturing in-house, especially for some of their connectivity products. So as those connectivity parts get sold into things like automotive, that gets converted into cash on the balance sheet. Good stuff.
As for guidance for the next quarter, Q4 of fiscal 2024, you can see that they've increased it slightly. Revenue midpoint guidance implies quarter over quarter and year over year growth of 5% and 15%. So still expecting more and more growth as the year continues.
Okay, so that gets us through automotive and how that's working wonders for Qualcomm's, not just their revenue growth, but especially their profit growth. Let's talk about point number 2 in revenue, And this is something we debunked the fourth quarter of last year. We'll link those videos below. But Qualcomm getting sunk in China because of restrictions to sell chips to Huawei and also new Huawei chips getting sold to Chinese OEMs. We explained, we thought, very clearly why this was not going to be end game for Qualcomm in China. Apparently, a lot of people didn't believe us. Here we are, CFO Akash Palkhiwala on at the last earnings call, Chinese smartphone OEMs, original equipment manufacturers, 50% year-over-year growth in revenue from that part of their handset business. And they're expecting it will continue to contribute to year-over-year revenue growth, which will help offset some of the other issues of the business that we've also addressed in the past. One of those being a little smartphone designer called Apple.
Yes, absolutely. There has been some concern regarding Qualcomm's contract with Apple. It has been made very clear by Qualcomm's C-suite that they have not been factoring in Apple's revenue stream into their guidance. This is from CEO Cristiano Amon. He said, as it relates to our business with Apple, we still operate with the framework that we provided to you, which is they are not adding in that revenue from Apple at this time. Anything that is generated from their contracts with Apple is icing on the cake, so to speak.
Yeah, and an important point on this because some new analysis has recently come out making the claim that this is also going to sink Qualcomm. But again, this was almost 3 years ago now that Qualcomm said their long-term earnings growth projections for low to mid-teens earnings growth through another 2 years or so, 3 years or so, does not factor for Apple contributing to that earnings growth. So as you said, Casey, icing on the cake here. And the icing is a pretty nice addition.
It must be chocolate frosting. Okay. And all of this to say that the guidance that is being provided just shows that Qualcomm is not in a sinking ship. In fact, their adjusted earnings per share on the midpoint implies quarter over quarter and year over year growth of 9% and 26%. Fantastic earnings.
Yeah, and again, maybe just clarify this. This, of course, now does include some Apple earnings for the remainder of this year because Apple ended up renewing the supply contract with Qualcomm and Broadcom last year. So their development of their own 5G connectivity parts still in some unknown point in development, going on 3+ years now since they bought that little unit from Intel in smartphone connectivity. All indications are it's not going super great. So who knows what's going to happen with Apple revenue for Qualcomm in fiscal year 2025 and 2026. But we do know at this point that we can factor for at least a little bit of Apple contribution for the next 2 years. We don't know how much, but I'm sure we'll get some updates to this. But again, just to drill down on this point, it's really important. If you've been following Qualcomm for at least the last few years, you already knew that management was planning for Apple revenue and earnings contribution to go to zero. This is good stuff.
Qualcomm, like every other stock, especially in tech and semiconductors over the last month, has taken a severe hit. It was up to about $220 per share just a few weeks ago, and now all the way down to $156 per share. We've been purchasing Qualcomm all through the end of 2023, beginning of 2024. What do you think now about adding Qualcomm to your portfolio at this point, Nick?
Well, it looks like a really great buying opportunity. And if you show our last slide here, this is the valuation based on the next 1 year expected earnings per share on a GAAP basis and free cash flow. Those two metrics have now converged. It looks like about 15 times 1 year forward PE and price to free cash flow. That looks like a pretty good deal. Now, that said, we already have a full position in Qualcomm. Like you said, Casey, we were buying throughout the downturn. Who might be interested in this stock at this point?
If you're looking for a large company that has a dividend, steady growth, this may be a great stock for your portfolio. If you're light on value stocks in your portfolio, this company may be a good bellwether to have.
Yeah, of course. Is it going to eliminate future cyclicality? And it's still a semiconductor business. We don't know when the next growth cycle will come to an end. But at this point, we are still in the early stages of a new growth cycle for most semiconductor markets, smartphones, laptops in particular, and then also automotive and industrial. We don't know how Qualcomm will kind of filter through that cycle, given their differentiated automotive portfolio. We'll just have to see. But it looks like for the next couple of years, this business will be a pretty solid, steady growth, not the fastest growing semiconductor business, but steadier growth and profit margin expansion. Not bad, not bad at all.
Make sure you check out our Semiconductor Insider membership. It gives you access to some exclusive things like our live Q&A events over on Discord. And unfortunately, we can't make a video about every company that we have covered in the past, or maybe is in our portfolio. So we do discuss all of those stocks over on our Discord channel. So that could be great value to you at $5 a month. Just $5 gets you access to that Semiconductor Insider membership. You can sign up at Ko-fi. We'll link that in the description below. See you all again soon at Chipstock Investor.